Hello and welcome to your weekly Technical Update, your guide to the charts that matter this week. I'm Andrew Gagan. We begin with a focus on quality stocks, with Zach Riaz from Banyan Tree Investment Management seeing as having lagged the broader market. He analyses Xero and REA, which have both pulled back, and he regards as being in oversold territory.
This is again showing you on the RSI index that some of these high quality stocks are oversold. I mean, Xero recently reported the result wasn't too bad. Yes, the acquisition, you may have some concerns about what they've paid, but strategically we think that acquisition makes a lot of sense. The very mature, high cash producing Australian, New Zealand business is still pretty good. Yes, the sub growth is a little bit slower. To acquire those subs is a little bit harder, but nonetheless, that provides a really good platform for global growth. And so, very stable management. And so Xero looks like, I think it's just way oversold territory, and it's been sold off with what's happening offshore. Similar with the REA, it's a high quality stock. REA, I believe, probably is impacted right now, likely on the back of the concerns around, obviously the Reserve Bank of Australia not cutting any further in the current cycle. And so, like other REITs or property exposed, consumer exposed stocks, you've seen them come off. But, at current levels, even from a trading perspective, I think REA looks like a really good trade. And for a long-term patient capital, I think REA is really worth a nibble.
Well, now to the smaller end of the Australian market, and Violetta Todorova from Leverage Shares is looking to trim some of the good performing large caps and rotate into the small caps. Here she analyses the small cap index and the stock Baby Bunting.
I'm getting very bullish on the Small Ordinary index. We are currently 10% outperforming the XRO, and I think this will continue for the rest of the year, and 2026 is gonna be the year for small caps. So I am suggesting Baby Bunting. I think the time for Baby Bunting to shine after long years of underperformance has arrived. If we look at the long-term chart, we see that finally Baby Bunting managed to break above resistance of $2.43, which confirms a large bottom formation. I'm very bullish on the stock for the next 6 to 12 months. And I think my first target of $4 would be easily achieved. And of course, $4.90 for 2026. So current prices are very, very attractive to acquire the stock.
And finally, Violetta Todorova breaks down the chart for Eagers Automotive, which has seen its share price appreciate more than 160% since the beginning of the year.
Eagers is amazing, but the stock is more than 200% in 12 months. So we are starting to see some signs of top formation. While the stock is not a sell, definitely not a sell, I think it will take a breather. And the price is currently trading between $30 and $35. So I think we will struggle to see higher prices from here. So I'm having a switch recommendation here, trimming APE Eager and buying Motorcycle Holdings, which is forming a very similar chart pattern to Baby Bunting, just broken above resistance of 344 and giving us a longer term price target of 520. So I'm very comfortably positioning with small caps right now.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.